Hey, welcome to DayTradeToWin.com. If you haven't lived under a rock for the past few weeks, you might have heard that the CME Group has released the Micro E-mini futures. These are equity index futures contracts and they're small. We now have Micro E-mini contracts for the S&P 500, Nasdaq 100, the Dow, and Russell 2000. There are many reasons for day trading in Micro E-mini futures, and the first reason is that you can trade the S&P 500 even if you have a small account size. And trading is probably the only occupation where you can start with a small amount of money and become a millionaire within a short period of time. Now, that's not going to be easy, but compared to setting up a lemonade stand or trying to become a pro football player, the potential is definitely there because you can scale up and grow so easily and let your profits compound. With the Micro E-mini futures, traders with small accounts can now also start equity index day trading. So let's take the S&P 500 contract as an example because the S&P 500, that's the most popular one. So there are now 3 futures contracts that you can use to trade the S&P 500. First, you have what is called the big contract, which is tracking the S&P 500 with the symbol SP. Its notional value is $250 times the S&P 500 index. So that's the value that a position theoretically controls, the agreed upon amount in the contract. The value of the S&P 500 index is currently somewhere around 2,800. So the big contract's notional value is 250 times 2,800, which equals $700,000. So pay $700,000 and you would own one contract. But in real life, futures contracts are traded on margin, so you wouldn't need to actually pay the $700,000 to trade. Still, the big contract is expensive and it's mostly institutional traders that would trade it. That's why the CME Group introduced the E-mini S&P 500 in 1997, so it's more than 20 years old. This is the second future contract for the S&P 500, and the notional value for the E-mini is 1/5 of the big contract, so $50 times the value of the S&P 500 index. So currently somewhere around $140,000. Again, you don't have to pay $140,000 to trade. As you trade on margin, you would only pay a small amount in order to trade the S&P 500, the E-mini contract. But the requirements are much smaller than the big contract, and that's why the E-mini S&P 500 has been so popular to trade, because it's accessible to so many retail traders. And now we also have the Micro E-mini futures, and trading the S&P 500 is now possible for even more traders. The notional value of the Micro E-mini is 1/10 of the big contract. So one contract of the Micro controls $5 times 2,800, which is $14,000. But you only need an account with a fraction of that amount in order to be trading the Micro E-mini futures. There has been a huge interest in the micros, and I think more and more traders will start trading futures now. More forex traders will switch to futures, and it's a little bit more sophisticated to trade futures than to trade forex. Many people consider forex trading to be some sort of a get-rich-quick scheme, while futures trading is definitely a sophisticated and respectable occupation. And it's super awesome that our day trading strategies work just as well with the Micro E-minis as the E-minis and the big contracts. Another huge benefit of the micros is scaling, the ability to scale. You can scale up your positions more easily. So nice thing about the Micro E-mini futures is that even if you have a bigger account size, you can now also easily add contracts to your position. Say you don't have a big account and you have been trading with a position size of 1 contract of the E-mini, which is common for beginners. It's difficult to grow because going from 1 contract to 2 contracts would be a big change. That's a 200% position size increase. But now with the Micro E-minis, you can go from 10 contracts to 11 to 12 to 13 and 14 and so on, and build your account size and position size more easily without the stress of trading that much bigger positions. And trading psychology can really mess up your trading, so the less you stress out about your position size, the better. And you can also add more money to winning trades. Sometimes traders establish a small position, and if their analysis was right and the market moves in his or her favor, they would add more to that position. And in my own trading, I've been using the idea of establishing the position in thirds. I would enter a position with a third of the capital. I would add another third once the position proves itself, and then add the final third a little bit later as the market moves in my favor. And by doing that, I don't risk as much initially, but I still gain a lot when the market makes a big move. Many of our traders that start out trading on our free day trading simulator with free live real-time data tell us that going from simulator to live and then growing the account can be stressful, but this has now changed. You can go to DayTradeToWin.com to get our free day trading simulator, start trading micro E-minis. We also offer day trading strategies that you can use to day trade the micros, E-minis and the big contracts, and we have a day trading mentorship program which starts soon. If you want to learn the details about these contracts, go to DayTradeToWin.com, scroll down to the bottom of the page and click Micro E-mini Futures. That's it. Until next time, good trading.